I'm Anthony Smith, and you're watching the Chart of the Week. Hello, and welcome to our weekly video. The conflict in Russia and Ukraine has sparked some questions about investment exposure to that region. We live in a global economy, and of course, the turmoil in Ukraine has spillover effects across many geographies and sectors, but the focus of this week's video is: what is the direct exposure to Russian company stocks in your investment portfolio? Now, let's start with a major reason why that question is being asked right now. And that's the chart you see now. This is a 5-year look back at the Russian stock index. It has lost 45% of its value year to date in 2022. When your home country invades a neighbor and is then hit with sanctions, it's generally not good for business. So let's get to what your direct exposure could be. And we'll assume a globally diversified stock portfolio. We endorse the concept of being globally diversified by market capitalizations, so as not to place any bets on any particular countries or regions. So equity exposures might look roughly like this: 60% in US stocks, 25% in international developed economies like Japan, Canada, Western Europe, Australia, and then 15% in emerging markets. Now, these percentages, they're not exact, but they're close. Emerging markets, the 15% slice, that's where you'll find Russian stocks. Next, let's look at a popular emerging markets stock ETF from Vanguard. The ticker is VWO. And here are the top 10 country allocations in that ETF. China is the largest, representing more than a third of the ETF by weight. If you go down the list, you'll see that Russia makes up about 3.1%. And that was actually at the end of 2021. It is less now with the underperformance of Russian stocks. So if you take the 3.1% of this ETF multiplied by the 15% of your portfolio that could be in emerging markets, it amounts to about 0.5% of your stock portfolio being in Russian stocks. I think that is an insignificant amount. So why would we want any direct exposure to a country like Russia that has a tendency towards saber rattling and, in this case, even worse, invading Ukraine? Well, we're not in the business of actively handpicking countries that we think could outperform in the near or intermediate term. In fact, we don't think anybody can successfully do that for an extended period of time. And take a look at this next chart, which shows the equity returns by country in 2021. The Russian stock index was up around 20% last year, which was much better than the overall emerging markets sector. The Vanguard ETF that we just referenced earlier was up about 1% in 2021. That's it for this week. Thanks for watching. We'll see you next week.